Ladies and gentlemen, the US economy, is it going strong or is it coming down? Despite all the things that Donald Trump has thrown at the rest of the world, why is it that the stock market is hitting new highs? Today, I'll attempt to answer all these questions. And there's an important announcement that I'll be announcing in this video. So let's just watch on. So the US economy question right now that everybody will have is it going to crash soon or is it going to grow from strength to strength? And today, let's analyze this. The big announcement that I have right now is that tonight around 10 to 10:15 p.m., I'll be going live on YouTube and I will be explaining to everybody what the long-awaited artificial intelligence course will be. And there will be a sign-up opportunity tonight for everybody. The seats are limited. So please join us in a live stream at around 10 to 10:15. Make sure you hit subscribe with the notification on both my Telegram channel and my YouTube so that you'll get the notification. Okay. So the sign up will only be on YouTube, so don't miss it. So Wall Street Journal just came out with this amazing news article that says that the US economy is regaining its swagger. Now, what is swagger? Swagger is those people who walk very hao-lian, very full of confidence and arrogance and things like that. So consumer spending after spring's tariff chill is up again. And although some expect the growth to be slow, a lot of people expected after Donald Trump threw a ton of chaos into the economy is going to tank. But it didn't. Now businesses and consumer are regaining their swagger. And evidence is mounting that those who held back are starting to splurge again. The stock market is reaching record highs again and again and again. And the University of Michigan Consumer Sentiment Index, which tumbled in April to its lowest reading in almost 3 years, began climbing up again. Retail sales are up more than economists had forecast, and sky-high inflation that everybody was frightened about didn't really happen. At least not yet. So in the midst of all this news, S&P 500 hit an all-time high yesterday, and so did the Nasdaq. And this is really at a time where we least expected it. So the economy of US is not in a bad shape. So in summary, the US economy is showing renewed strength, defying earlier fears that the downturn from the tariffs and policy changes. Consumer sentiment and retail sales are rebounding. And as we said earlier, stock market hitting record high again and again and again and again. And the inflation remains subdued right now. Despite political pressure, new tariffs from Donald Trump, the Federal Reserve have maintained its current monetary policy stand, and that is not supposed to be good for stock market. And yet, the economy continue to grow steadily, supported by resilient consumer and business activity, even amidst all this political tariff chaos and even monetary chaos. So at the start of the year, the Federal Reserve has maintained its currency monetary stance since it began in 2022. It did cut by a little bit, but it more or less stay where it is. And Donald Trump came on board, created a hell lot of chaos, and even criticized Jay Powell monetary policy, interest rate policy, and things like that. And that's despite Federal Reserve maintaining its stance, don't care about Trump and all this. Guess what? The stock market continue to rise, the economy continue to rise, inflation continue subdued, all good. So the S&P 500 yesterday actually hit a high of 6,330 points or so before it went down a little bit, but it was still on a record high as well. The Nasdaq hit also a record high somewhere in the midday, okay, about 232 something. And then it went down by a little bit, but it's still on a very amazing rise as well. The TLT, also strengthened a little bit in the day, then came down a little bit, but generally maintained well. So all these are signaling that the US is doing strong, and all the earlier prediction that the US economy would likely go into recession, now all the analysts are doing a terbelakang, 180 degrees turn, and say that we expect it to grow as compared to earlier prediction. So things are going in an okay manner. This despite all the tariff threats are happening, and we don't really know yet because Donald Trump haven't really executed any tariff threats. And so far, it's a series of hot air since arguably since April or even March until now. Nothing really has happened in a big way. So JP Morgan Chase reported unexpectedly strong earnings, said that the bank's economists are no longer expecting a recession. Okay, after the initial shock, everyone went on a hold, but at a certain moment, you just have to move on with your life. It does feel like some of this happening just because you can't delay forever. So everything seems to be doing fine, and that's despite even the CEO of JP Morgan actually kind of warned that disaster and hell might fall down. They were the one the biggest sandbagger, right? We call them, they're basically sandbagging and just managing expectation. They themselves doing fantastically well. Now, the employment situation, there is some weakness. However, the unemployment rate remains at 4.1%, seems to be on the low side, okay? And things seems to be doing good as well. So everybody, although seems to be holding back, but now, they are all letting go. And largely, in my opinion, that's because on the money market side, the fixed deposit, the fixed income, a lot of returns are coming down rapidly. Today, you just can take a look at all your T-bills and your fixed income. It's going down, 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 down. And what would you do in those type of situations? You have to put money somewhere. You have to put it in a bank, or you put it into, alternatives. And the alternatives in this case is a clear-cut stock market. Meanwhile, on the other hand, I need to update everybody. The European Union in the trade war negotiation right now seems to be ready for war. US-Europe trade war discussion doesn't seem to be heading anywhere good. The Europe now prepares for a US trade fight. The EU is actually wanting a deal, but the US demand keep growing, and I think they are reaching a stage where they say enough is enough. So right now this is something that they are really unhappy about. So US official told EU trade chief this past week that they expected President Trump to demand further concessions from the bloc to get an agreement, including a baseline tariff on most European goods that could be in a range of 15% or higher, according to people briefed on the talks. This was an unwelcome surprise for EU, which has been working towards an agreement that will keep the baseline tariff at 10%. Already a tough concession for some of the 27 countries. This shift prompted Germany, who was Europe's largest economy and bigger exporter, previously quite dovish towards US retaliation. Now they are preparing to be confrontational. So even German officials who have pressed for a quick deal no longer see an agreement with the US as the most likely outcome. So Berlin signaled that it could support EU using a so-called anti-coercion instrument, which is a legal tool to let the bloc hit back at economic bullying from the US within a range of restrictions on trade and investment. To be frank, I tried to Google and try to AI search what anti-coercion instrument is. It just seems like a series of anti-tariffs, right? So don't really know a detail, but doesn't seem to be that frightening to Donald Trump if I were him. So the EU view this anti-coercion instrument as the most powerful trade weapon that the bloc has. And I don't think I don't know the detail because it's not clearly visible, but I don't think Trump is afraid of it. So the EU officials still think that a deal is possible. The bloc doesn't plan to launch any retaliation before Trump's August the 1st deadline, and the preparation of measure could be introduced using anti-coercion instrument doesn't necessarily mean that the tool will be deployed. Basically, it means that it's used as a last resort to just frighten Trump, and I don't think Trump is frightened by this thing. So my key takeaway from all this is that the upswing in US and global equities, including Singapore equities, is largely driven by a substitution effect, where people actually take money out of very low yielding instruments like fixed income and money market towards the equities. And all these trade wars that are happening between US and non-China countries, that means Any other country, EU, Canada, Mexico, Japan, whatever, I call it nuances, just noise. Doesn't really matter much to the rest of the world. The two big one is US and China. If a war were to re-erupt between these two countries, then there is some show to be watched. Okay, so the key is to see if US-China trade war were to reignite, and that will take probably a month or two to see. So I'll see you tonight at around 10 to 10:15. Okay, and we'll have a wonderful time looking at AI and opportunities. And I'll see you tonight. Bye bye.